Howdy, Jacob here. Next company on our dividend yield screener is Copa Holdings. Let's get into the numbers here. 3.5% forward yield. Looks like it's jumped up quite a bit since I did the screener. Um, so, price, just in case no one knows, price goes up, yield goes down since it's on they pay out a certain amount and it's not based on the market cap. So stock price went up, yield went down, but 3.5% is still pretty hefty. So we'll definitely take a gander at it. $3.9 billion market cap, $4 billion enterprise value. So nearly same amount of cash on hand as debt, which is pretty interesting um, for an airline company. So it looks like it goes between North, Central, and South America with the Caribbeans out of its Panama City hub. The thing I know about most airlines is that they're pretty capital intensive. So let's see, we got here very volatile property, plant, and equipment. That's interesting. So 179 million, 100 million, nothing. Maybe sold something off as well as used um, the reinvestments and expenditures. 98 mil, 272 mil, 13 mil. But I guess 2020 they're probably selling things off because what do we have here? Drop of crazy amount, 70%. All right. So very consistent earnings. I mean, 20 outside of 2015 and 2020, looking at positive earnings. So that's a pretty positive sign for um, for an airline company. We got 3.28. So let's see what they're paying out in dividends of hopefully, let's see what do they got. $3.28 versus $7 per share, 5.8 per share, $8.50 per share. I mean, the good years, it's definitely less than half, which is good, but it's seasonal in the essence of recessionary. Seems like people don't want to fly in recessions, crazy enough. So I think we can start getting to some assumptions here. So, I mean, let's assume 3% revenue growth. Um, Pretty solid return on invested cap. 15, 11, minus 8, 11, 11. I mean, it's not consistent enough for me to give it a premium, so we'll shoot it up to 13p, 15% discount rate. Let's see, what are earnings looking like? Gross margin down a little bit, but not too much. Roughly 37%. 39 got as high as 40. Operating margin pre-COVID was going down a little. Well, it's pretty good though. I mean, over 10% operating margin. That's pretty solid. So, this is gonna be tough to look at since we're gonna be assuming it goes back to more so normal, but making assumptions are going to be a little bit more on the conservative end. So I might do something like 10, 12, share change, increase 1%. Let's see, why do I think that? I've been buying back a little bit, not so much stock based compensation. I mean, I'll just keep it flat. We'll keep it flat. So that gets us to, let's see, the $3.28 dividend. How confident are we in that? I mean, I feel fine with it. I mean, we're looking at again $3.20 dividend, and it's just kind of volatile. So I feel like in the good years, they're going to make up for it by hopefully increasing their cash position to pay for the dividend, maybe that um, they pay out later. So I feel pretty comfortable with that. So they're paying out about 120, a little over 100 million. That was just quick math. It's not shown here, but Um, they had 240 million last year, 170 the year before. I mean, they can afford it. So um, I wouldn't be too comfortable bumping it up too much. I mean, even before that, their dividend was pretty volatile up and down. So, well, let's just try to assume the $3.28 sticks for 7 years. But even still, it looks like it need to drop roughly 30% to get us to that 15% yield. But honestly, probably a good company to keep on your list. Wait till it gets to a price that makes you want to look into it, and then look into it, see if it's something that you understand, and then if it's at a price that looks good, you understand it, hop on. So thanks everybody, and hope you have a great rest of your day.